All right, welcome to again to week one of this fall semester for payroll. I'm not going to spend more than about 4 or 5 minutes here on chapter one. It's mainly just an informational chapter that you can read through my notes, read through the chapter in the book, and you'll get most of the information that you need. I thought some of the facts that I have here seemed like they were relevant to the course. If you didn't know, the tax wasn't even allowed. It wasn't constitutionally legal until 1913 when it became Congress approved it, and then all the states had to ratify it. They tried to do it in the Civil War, but it was challenged and put down. Biweekly seems to be the most common pay. Some people like weekly, but some people ask me, is there a better way to do it? Is it more expensive? Is it do you pay more taxes maybe if you do it weekly or monthly or something else? The answer is no. It becomes more of a convenience for the employer and a cost-saving factor. If you do it less, then that's less time that somebody's having to spend and to prepare all the payroll. Usually, a lot of times now, payroll and HR are combining. So that's, except for some big companies like ADP is a payroll company. They are mainly just do payroll, but in a lot of small companies, HR and payroll will combine together. Payroll can be and I'm going to be like this, where I want things very particular, no margin of error. Because if you start messing around with people's paychecks, it gets to be a very dicey situation. So I got some of the pay ranges, what entry-level or mid-level, senior-level person will do in a particular pay job. When we get into, we're going to touch on almost all of these, or actually all of them, as we go through the course. But just a quick overview, like the Fair Labor Standard Act, that's one of the biggies that we're going to actually cover that in a few minutes when we get into chapter 2. So I'll skip through that for right now because we're going to hit that in just a couple minutes. We're going to hit FICA taxes. That's going to be next week in week 2, and federal income taxes as well. We're going to hit those in the weeks 2, 3, 4, and 5. We're going to hit federal FICA taxes and your income taxes. That's the meat of this course will be. Going into week 6, we're going to look at the unemployment tax, FUTA, and SUTA. This fair employment laws, the Civil Rights Act of '64, basically saying you can't hire or fire based on discrimination. Most of us know that. You can ask questions like, are you a U.S. citizen? Because that is a requirement to work most jobs in the U.S. You have to be a U.S. citizen or have some kind of maybe a green card or a visa. But that would be one of the exceptions that you can ask. You have to follow the Civil Rights Act, and there is this little clause. If you participate in interstate commerce, and that we're going to look at in Chapter 2 again, but interstate commerce is basically if you buy and sell items, and the items go more than just one state, and almost any business nowadays is going to have supplies that they buy and sell, buy from another state or sell to another state, and therefore you would be involved in interstate commerce. It's not all done just, say, in Indiana. Your customers and your buyers are only in Indiana. And if you have 15 or more people, 20 days, at least more than 20 weeks. I want you to read through all of these in detail. I'm just going to hit, again, a few of the main things. Age discrimination is only for those it's meant for those over 40. It's not meant for the younger. You can't say you're too young. That is not considered age discrimination. It's the other way around for anybody who's older. American Disabilities Act. Companies must offer a reasonable accommodations. And reasonable, that could be, there's a big leeway there. Reasonable accommodations if you have some kind of a disability. Reasonable would probably depend on the company and the company size. Let's skip down the I-9 form. Immigration, that's people have to fill this out before you start working. Usually it says side A, if you present your passport, that's good enough. If you pick side B, you got to do column 1, column 2, like a driver's license and a birth certificate. So that's what that I-9 form is are you eligible to work in the United States? Family and Medical Leave Act, it's for 12 weeks. They don't have to be consecutive weeks. You can't even take it daily. I've heard of people even taking hourly. So FMLA is you get up to 12 weeks of non-paid time off, and you don't have to lose your job or your position rank, basically. So that's if you can present some kind of a Family and Medical Leave Act for you or anybody in your immediate family. Let's go down to workers' comp. Workers' compensation is compensation you get if you were injured on the job, or if you died on the job, it gets paid to your family. Some things that all companies have to have insurance in place for workman's comp. Of course, that insurance premium is going to depend on the type of work that your employees do. And then finally, the last thing in this little section here that I'm gonna jump to and explain a little bit more in detail is the Obamacare. Obamacare, for payroll purposes, doesn't affect payroll very much at all. The only time it's going to affect payroll is if the employee earns over $200,000 and they're single, or $250,000 if they're married. At that point, if they do hit that threshold, they're going to pay a higher Medicare tax than otherwise that normal people would pay. That's the only real reason where payroll is affected by the Obamacare. It's more in the tax and reporting it tax-wise. If you don't have insurance, you have to report that on your 1040 and pay a penalty. Okay, the last thing is we're going to become very familiar with payroll registers. And the payroll register is a summary of that week's payroll. So it shows who the employee is, how much they earned, how much of their earnings are taxable, and then how much tax needs to be taken out of their paycheck based on their earnings. And that's what this payroll register is. You can kind of get a glimpse of what one looks like on page 1-21 of the book. Okay. Again, I want you to read through all of Chapter 1 information here, but there's not a whole lot for me to cover in depth, so we're going to move on to 2. Who is an employee? Chapter 1 and Chapter 2 aren't all that difficult. Chapter 2 is a little bit, I guess, more difficult. Where we really get into what I consider the good stuff and the fun stuff is next week, weeks 2, 3, 4, and 5, and 6, where we start even looking at how to fill out forms and what all goes along with that. So Chapter 2, who's an employee? Basically, if you can control what they do and how it's to be done, you are considered an employee. Actual titles mean nothing. Just because your boss or your employer tells you you're an independent contractor, you may or may not be. A lot of companies get penalized and hit with fees if they call somebody an independent contractor when they're really not. I had not me personally, but I had a student who worked at a bowling alley, worked in the pro shop of the bowling alley where they sell the bowling balls and all the different things, and they were considered an independent contractor. And after we go through this, you'll find that there's no way that individual should have been an independent contractor. And they tried to really get around it by just paying him cash out of the drawer instead of paying him a regular check. So they didn't take any taxes out, and that's a big no-no. So who's an independent contractor? Here's a list. They don't have to meet all of these. Basically, you meet more than you don't is a good a good understanding if you are an independent contractor or not. One of the biggies that I think is you're paid by the job and you have the opportunity for a loss, meaning you're paid $500 for a job and all of a sudden it takes you 10 hours instead of 5 that you thought, so you could actually have a loss after you've applied all of the tools that were required and materials. That's a biggie. If you set your own hours, but that doesn't necessarily mean that, because, for example, here at Ivy Tech, I pretty much set my own hours depending on when I set the classes and when office hours need to be. So that doesn't necessarily mean it, but that's one of the options. Here's that profit or loss. You have the ability for a profit or loss. You have your own tools. So if you work for, say, a cable company, but you're kind of an independent in that you work for different cable companies, and you have your own cable tools that helps whatever it would be. That I don't have any knowledge of cable companies, but I'm sure you have to have a certain amount of tools. And if you have your own, you would be much more likely considered an independent contractor, especially if you work for more than just Comcast. You work for AT&T and for Bright House, I think is one. If you really don't know, you can fill out a form in SS8 or call, and it's about 9 out of 10 times that a person, if they have to call, that they end up being considered an employee. So most of the time people are an employee if there's ever a question. Fair Labor Standards Act. So we just barely looked at this on Chapter 1, but we're going to get into it in a lot more detail here. So Fair Labor Standards Act says you have some basic rights as an employee, and the employer has to do a few things to protect you. The enterprise covers, it says you are going to be covered by FLSA if these items are met. Only you have to have 2 people who work with interstate commerce, like I had briefly explained before, and I go into a lot more detail here. Interstate commerce, purchasing, selling of goods between different states. If you are routinely ordering materials and supplies from vendors or selling it to state customers out of state, you are engaged in interstate commerce. And they note here that practically everything is going to be networked and be interstate commerce. So that's going to almost always be met, except maybe if you have a mowing company and you only mow yards in Indiana. That may be an example. Business income of at least $500,000. If you have revenue of at least $500,000. And for most businesses that have 2 or 3 employees, they're probably going to have that or close to it. Okay, individual coverage, there are a few things if we don't meet the main guidelines up there that you will be automatically covered. If you yourself engage in interstate commerce, okay, exceptions, meaning they are automatically included, and I don't really know of any hospital, school, college that doesn't have at least $500,000 in income, so they would automatically hit that guideline. But they're going to be included no matter what. Nursing home. Basic rights, what FLSA says, you have to at least pay your employees minimum wage. There is no discrimination based on male or female. You have to give overtime, and then we will go over the overtime rules. You must keep track and keep record of all of your who you pay, how much, and how you base that pay. You're going to have to follow the child labor laws too, like a worker's permit, having the child have a worker's permit, and at age 16 they can do certain things, age 17 they can do other things, 15 and below, they're quite a bit limited. Okay, so I give you an idea here of what's all included in a typical wage. That includes bonuses. I give us out here some minimum wage items that I thought were neat. Back in 1938, it was only 25 cents. and the standard work week was up to 44 hours. Now, of course, it's down to 40. Our minimum wage hasn't changed since 2009. Obama had recently stated in his State of the Union he'd like to see it up to 10.10 at least, and that's what they're doing in D.C. You have to pay your workers at least $10.10 if you want a federal contract. L.A. is even higher. They're up starting, I think, next year. They're going to progressively go up to $15 an hour minimum wage. Of course, the cost of living is quite a bit higher in LA, but they're going to have in the LA area, you're going to make at least $15 an hour by, I think it's the year 2020. So I thought that was kind of interesting. One of the questions, the discussion board questions that I'm going to propose is this. And I thought this was pretty interesting, the way when they talk about raising minimum wage. If you go from $7.25 to $10.10, those who are just starting out or who don't make even $10.10 an hour are going to be thrilled. But what about that person who has worked there for 2 years and just now earns slightly over $10.10 or real close to it? They're not going to be real happy when somebody brand new is now making exactly the same as they do or just slightly a little bit less, when before they were $2 or $3, $4 ahead. So what do? Do we raise the standard for everybody? If minimum wage goes up, then we raise everybody else's pay up. Well, could do that, I guess. So I give this example here. If someone starts at $9 an hour and now earns $10.50, should they be left out of that 40% wage increase? Because when you go up from $7.25 to $10.10, that's a 40% increase. That's pretty big. So if that person who's now making $10.50, if they get a 40% raise, they're going to go up to $14.70 an hour. That's another nice big jump, but really hard on the employer to try to come up with that money. So, and then where does it stop? Do you give a 40% raise to someone making $50,000? Why or why not? Why should they be left out, or should they be included, and then it really ups their wage? And if everybody's included, then minimum wage, the increase for the low-end employees, did no good. If everybody goes up 40%, that means the cost of all items are going to go up 40%. Therefore, having the minimum wage go up 40% is silly. It doesn't help anything. So that's one of the things we'll discuss in one of the discussion boards coming up, because I'd like to see your opinions on that. I think it's neat. Okay, about 3.6 million receive wages of $15,000 a year. That's close to minimum wage. 60% of people are considered hourly. Notice that if a city like LA has a higher rate than the minimum wage, then that state or city wins. They're going to have to do that. An example of a state that has a higher wage limit than Indiana or federal, Illinois is one example. They're $1 higher. And then some exemptions, because not everybody is paid minimum wage, as you know, and one of the biggest ones is restaurant employees who are waiters and waitresses. They have to be paid at least $2.13 an hour. But the caveat here is if they are not tipped and they don't make at least $7.25 with tips, make an average rate of $7.25 per hour when they include all their tips, the employer has to make up the difference. So usually they're going to make at least $7.25 when you add in the $2.13 an hour in base pay. You can read through here a couple other people who don't have to be paid at least minimum wage. There are some people who are exempt from the minimum wage and overtime requirements. We're going to look at overtime in just a minute, what that means. But if you meet one of these 4 criteria, you're an executive. You basically have people report to you. You are an administrative worker, professional. You have a college degree, and you're working in that degree field. and or you earn over 100,000, that's considered non-manual work. If you're still blue collar, you're not exempt. If you're blue collar and you make 100,000, you still get overtime pay. But those who are basically in a salary position are not required to have overtime pay. I thought this was interesting. In 2012, there was a report over 7,000 lawsuits were filed, and they went and they covered a lot of these FLSA rules and requirements, and a lot of them were based on overtime pay. Okay, so employers definitely don't want to pay overtime because they have to pay more. Solution, employers can say, we're going to hire you on a salary. Call these workers exempt. What about those people who work outside the office, like I do a lot? I answer emails, work on class stuff, and do grading outside the office at home. You know, I'm a salary person, so that time doesn't count. That's a big gripe. So some employers say no work after outside the hours. We don't give you smartphones or any type of device that allows you to connect to work. So that's one way that employers, because basically if you're an hourly employee and you work outside of home, employers are required to pay you for that unless they have specific statements in their policy that say otherwise for you not to work outside of home or outside of the office. Okay. When we talk about pay, and we're going to talk about this quite a bit in the future, there's a big difference between, and it's good to know what bi means, like bi-weekly, and semi-monthly. Bi is, think of it like a bicycle. There's two of them. So if you're paid bi-monthly, you're paid twice a month, once every other. So usually if you're paid bi-weekly, you're paid once every other week. Semi, twice per month. Most people would not be paid semi-weekly. That would be kind of weird to be paid twice a week. It could happen, but it's not very common. It's kind of sometimes you hear a semi-annual sale that some companies will have, like JCPenney or Kohl's, or semi-annual would be twice per year. Or bicentennial would be you had 100 years. When you're calculating hourly pay, there are some easy ways to go about doing this. I'm going to bring up to show you how I do it. Almost there. Okay. So if you make $690 a week and you want to know, well, what's my hourly pay, and you work 40 hours a week, that's pretty straightforward on how to do that. $690, somebody says, I'm going to pay you $690 a week, and you know that you're going to work about 40 hours a week, you can easily determine what your hourly pay is. If on the other hand they tell you, I'm going to pay you $12.50 bi-weekly, so that would be every other week. Well, we had to do a little bit more calculation here, not much. $12.50, that's over not 40 hours, but 80 hours. So we can easily, again, determine what your hourly pay is. Where it gets to be a little more complicated is when people are paid semi-monthly, because semi-monthly doesn't necessarily mean that you're getting 80 hours. Semi-monthly is 20 hours, 40 hours per week, but then there's usually an extra day or two in that calculation. So what you have to do is bump it up to a yearly amount and then work down from there. So if somebody makes $1,250 semi-monthly, that means they're paid twice a month. So I want to determine if they're made twice a month, $12.50, how much do they make in a year? If they paid twice a month, they're going to have 24 paychecks. $12.50 twice a month times 24, they're making $30,000 a year. So $30,000 over 52 weeks. Then we can divide that out, $576 per week. And then we can go back up to what we did in example 1, take our weekly amount divided by 40, and you're going to make $14.42 an hour. About. That's maybe exactly, maybe you get vacation time. But it gives you a good rough estimate. One way to do this in your head, and what you can do is if you make, go back up here, if you make $30,000 a year, you can round that and pretend that it's only 50 weeks, and then you're making $15 an hour. If you go up to 40,000, you're at $20 an hour. So every 10,000 you go up in wages, you go up $5 an hour in hourly wages. So 40,000 a year is $20. If you go up to 50,000, that's $25 an hour, and that gives you a good rough estimate of how much you're earning. Overtime pay, 1.5 times your hourly rate. That is generally what overtime is. And overtime is if you work over 40 hours in a week. And a week is any consecutive 7 days. Overtime is not paid just because you work on Saturday or a holiday or a Sunday, or even if you work over 8 hours in one day. It's only if you are worked over 40 hours in a week. After that 40th hour, they have to pay you your regular rate times an extra half pay. And there's 2 ways to calculate it. You can take your hours worked times the base pay, get your normal work, and then any of those overtime hours, if say you work 44 hours, you would take those 4 hours and multiply it by the additional half. Or you could say, okay, I'm going to stop it at 40, times it by my base pay, figure out what I normally would make, and then any of those extra hours at 4, say there's 4 hours, multiply it by time and a half. So the only difference was here we took all 44 hours times base pay, and then those overtime hours just adding in the extra half. So it comes out to be the exact same as you see down here. If you work 44 hours and you make $14 an hour, you could just do your regular base, you make $5.60. And then those extra hours you're going to get paid $84, so $6.44 total. If you make the second way, you could say, okay, all 44 hours are going to be paid my base pay at least, and then those extra 4 hours, time and a half, so I get half of that time again. So half of 14 is 7, I get an extra $28. That comes out to be the $6.44. Okay, let's skip down. We talked about the tipped employees. They have to make at least $7.25 if they don't make quite the tips. With nurses can companies can choose, since nurses have weird work schedules. Usually they work 12 hours on, 12 off. They can calculate their overtime based on a 14-day period instead of 7, and that usually will work out a little more accurately. So I give us this example here. The nurse works 12 hours a day for 12 hours a day, and is paid $30 an hour. So she works 3 of these 12-hour days. So she's working 72 hours. Therefore, she did not go over the 80 hours over that 2 weeks. 24 hours of working 4 hours over the standard 8-hour a day. So the type 1 method, normal pay, 8 hours per day times 6 days. She gets paid $14.40. because you get 30 bucks an hour. And then you do the overtime, 4 hours a day times 6 days, because if we go back up here and look at the nurses, they're on a 14-day period, so they must work over 80 hours, or if they work more than 8 hours a day, then they can get overtime. So that's very, very different than what normal employees get. So that's why this is kind of a better thing for nurses. Because otherwise nurses wouldn't get any overtime pay when they are over that 14-day period. But when you add in this or period, this 8 hours per day, if they work over that, they get overtime. So that's where this extra 4 hours a day times 6 days over those 2 weeks. So they had 24 hours extra time at time and a half. So $45 an hour, 30 times 1.5. So they made an additional $1,080 in overtime for a total pay of $25.20 that pay period. You can work through this piece rate. It's pretty straightforward, I think. Equal Pay Act basically says if you do the same job as somebody else, you should be getting paid the same. The only exclusions are seniority. You get paid more if you've been there longer. If you do a better job and it's documented, so that's the merit there. And that's also kind of what it's saying here, quantity or quality production. You do better work, you make more items, yeah, you should get paid more, even though if you're doing the same job, if you do it better. But that better be able to be documented. Otherwise, it's going to look pretty bad. The final items here, what counts as work time? Does it count when you are going to and from work, the travel? No, that's the commuting. That obviously doesn't count. But any travel you do during your normal hours, like from 9 to 5, does count as work time. So if you have to travel between 2 locations for your job, that is considered a typical work time. So what counts as work time? The overall rule is depends on your job description. Are they an integral part of performing your job? So if you are working in meat and poultry processing, putting on that principal gear is considered a principal activity of your job, that protective gear. So that would be considered part of work time. Idle time, if the machine breaks down, yes, that's counting. If you're there and available but something breaks, that counts as work time. Rest periods, no. Working at home, yes, you are supposed to be paid. And that's for non-exempt employees, those who are hourly, basically. Salaried wouldn't count. Training sessions, yes, you are to be paid, unless it is voluntary. And then the child labor restrictions, this is another one of those FLSA items, Fair Labor Standards Act. 16 is kind of that age where you can start working quite a bit more. If you're in the younger 14 and 15, you're pretty limited to just the retail stores, fast food, and gas stations. Something I didn't really even know until I started teaching this. And obviously you couldn't work during school hours, and you can only work 3 days if you're 14 or 15, and a max of 18 hours total. You have to be done working by 7 on a school night, 9 in the summer. Children in the younger 10, 11 can work, but it's usually during, it's in the farming. Anybody who is over 17, at 17 and older can pretty much work any hours they want. You have to be at least 18 to do any dangerous type jobs. And then, of course, any minors need a work permit, as most of you probably are familiar with. You don't want to mess with the FLSA, basically by cheating somebody overtime, by not calling them an employee if they are. There are some pretty big fines and hefty penalties. So it's obviously in your best interest to play by the rules. Okay, that's about it for this Chapter 1. Chapter 2, again, if you send in your answers to your instructor, Betty Jackson, or if it's during a semester where I'm teaching it, send it to me. We'll go over it, check it, and mark any items that are wrong, and so hopefully you can do very well and get a good grade on these assignments and any future assignments. Again, I hope to have these lectures up for the week ahead of time so you can watch them. I think they'll become a lot more helpful, and they'll be, as we go through and get into a little bit tougher material, especially when we do some of the forms, the payroll forms. So with that, we'll call it over, and